Welcome to Preserving Your Wealth with Mike McCormick, where we talk about smart ways to invest and preserve your money. Mike is a registered investment advisor with McCormick Financial Advisors in Bozeman, Montana. As an independent fiduciary, Mike does not receive commissions from any of the products or investments mentioned on this program. Consult a professional before making any investment decision. You can find old shows archived at McCormickFinancialadvisors.com. Learn, participate, interact.
And the aforementioned Mike McCormick is in the house. How you doing, man?
I'm great, thank you. Got to take my SARS mask off.
I was going to say, yeah.
Speak in the microphone.
Hey, Michael, welcome to the house.
Good morning, Shane. Happy Thursday.
Well, we were just...
I don't think so. I think the Dow's going to open up pretty harsh again. The world is down, 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 Michael.
Sales, opportunity.
That's right. Buy now.
Well, that's the trick, right?
That's right. Buy low, sell high.
And are we low? We said now that we've seen we were high, right?
Yeah, right.
We did see where high was. Now, question is where's the low? It looks like a B-rated horror movie on the television screen over here with red. Oh, there's a green something. Gilead Sciences.
Yeah.
Anyway,
I'm surprised.
Maybe they found the cure to the coronavirus. Is what it must be.
I'm surprised the tech stocks aren't doing better because you're sitting in mom's basement in your underwear on the net. You don't talk to anybody. You don't see anybody. Why are the tech stocks? Why is Facebook down $20 or
right.
Or Amazon,
because they're still able to go to work. You're saying because they're not actually getting together.
Yeah, right. So,
yeah. Well, so obviously we're in the middle of this thing right now. We're in the middle of a selling. We were just talking last week about how the bull had the reins, and now it looks like they've given him up. And so what I'm watching all the pundits, all the experts. Really, I suppose I'm a pundit. The other people would be the experts saying, okay, what's going to happen? What's going to happen? And people are saying this is different. This is not a typical V sheet. We're not going to have a V recovery on this one. We're not going to have an all clear signal like Trump was hoping to give us last night. And then we're going to show up and say, woof, we're all back to normal.
Yeah.
I'm not so sure. It might be a bigger V. The V might be big. It might have a U-shaped bottom to it. Yeah. But, in the case of specifically to the virus, we still have very relatively few deaths happening because of it.
Yeah.
Even in the areas that are greatest hit, the highest statistics and blah blah blah. It's a bad thing. I'm not going to say it's not, and it's likely to continue to spread for a period of time. We are coming into springtime. People are going outside. We have to get through spring break. This is always my concern. We're flying for spring break, and even when there's no contagious disease of horror going around.
Yeah.
I usually get sick on spring break, jumping into a tin can with everybody else trying to go get warm.
I was going to say, yeah.
So we might be the family that's wearing masks this year. I don't know. It could be us.
Well, I was wondering about
the problem you have, excuse me, the Dow 30, which the world watches. One of the big players on it was United Health. Well, was it 380 last week or 2 weeks ago? And it's at $303. I mean, that when you have one single stock on the Dow that drops, that's like 25, 20.
Yeah, it's 25 percentage points at least. Yeah.
25 points. It's going to take the entire, average down.
And that's the thing is that these are all everybody's selling portfolios out, and they're selling correlated indexes out, and it makes them feel really good. When you sell and go to cash, you get endorphins. You've done something.
Yeah.
You've done something to make yourself safer. You watch the TV. You watch yourself not having missed opportunities. And then you have this incredible, incredible barrier to reentry that people only now just were getting over. I mean, from the Great Recession, people were only now just getting to the point where they're feeling comfortable putting money at risk, doing things. To some degree, that's the nature of the cycle, right? Is by the time the average person feels comfortable getting in the market, it's probably time not to. And by the time this average person gets out, you're out of phase with where you want to be. But we are looking at another big sell-off day, and I think it's going to take a weekend to really heal up on this feature. The selling, they're saying, it's not just coronavirus; it's problems with now we're pointing to the yield curve because we had some significant moves in the bond market that, frankly, I don't fully understand. But we've got rates going down, we've got bond prices that aren't going up. It's a good time to use my guidance, which is on icy roads, don't change lanes.
Yeah.
We've got icy roads right now. If you've been doing the right thing, you've been hoarding some cash and paying down debt, you've still been taking risk in your retirement accounts, and you will continue to, because there is a sale for money that's 10 years or more. Stock market hasn't had a losing period for 5 years or more. It's been 85% gains in any 5-year period, I believe.
Something like that. Same with the. There's never been a 20-year period where the S&P lost.
3 out of 4 years, the stock market goes up. So. No, I'm not calling this a buy signal. If you've been waiting to get in with your 50 grand or 500 grand or whatever it is, I'm not saying today's the day. It's never one day for it. This is a good time to sit on your hands and watch what happens and try and say, okay, this will probably recover. We'll probably come into April with this floating out of the news, and something else will occupy the news, and we'll come back and realize that the consumer is still really strong and healthy. And now the consumer's been given mortgage rates that are unbelievable. If you haven't refinanced your house in 8 years, or I don't know what the metric is, mortgage rates are unbelievably low right now.
Yeah.
It's one of those things. It's like it's costing them money to process the paper to give you this rate.
Yeah.
So there's a few things that you can still do, but I would suggest not making any changes to your portfolio unless. If you're looking to make some changes anyway, if you were ready to get out of something, you could get out now and not have as much capital gains and get into something else at a good price.
That's for sure.
That's one exception.
Yeah. Shane was talking earlier about all the markets around the world being down dramatically. Asia, European markets, and whatever. But Euro area economic sentiment at 9-month high, Shane.
Well, and the interesting thing too is the euro rose an entire basis point. That's a big jump in one day. It's back to 109 and 109, $1.09 almost back to $1.10. So things are, and the pound is weakened, but. The difficulty you have is your currency is so strong, and that's the big grief that everybody has, particularly when Michael's talking about the Fed interest rate and everything on your debt. It just makes it more difficult for people to still want to buy American products, and we'll see what happens. But it's pretty strange, Mike, isn't it? I mean, the ETFs have held up really well. You must be happy.
I am, and you're right. That is something, when we see these big shocks, we look to say, okay, are things functioning the way that we intended them? Obviously, we intend them to go up all the time, every day.
Right, sure.
But we hope, rather. We don't intend that. But yes, these vehicles that are become incredibly popular for people to invest in seem to be functioning in this period of high selling. We're seeing high-yield sell-offs in the HYG and JNK. JNK is cleverly named junk for junk bonds.
Right, yeah.
HYG is sort of, is a bit more popular with me because I don't need to say, and this is your junk bond holding.
It's like high and low cholesterol.
We say this is your high yield bond holding. Of course, they're not yielding very high.
That's true.
But yeah, we saw incredible amounts of outflows in those. And yes, Shane, you're right. So far, they appear to be functioning. And that's, we want markets to work. We don't want them, like I said with my off-color joke about the fly that has gas flying a straight line.
Straight line, yeah.
That's a warning sign, right? If every piece of news just makes the thing go up, it's like dealing with that relative where you all they do is just smile and say, "That's great, honey," and I've got stage 4 of this. Oh, great news! You're like, okay. This is not normal.
That would be true. For the benefit of our listeners, ETFs, exchange-traded funds, they are a basket of stocks that you trade like a single stock. You can buy and sell baskets of stocks.
And it's a great way to diversify low cost.
Yeah. Well,
so you could own the entire Dow index with one position. Yeah. If you wanted to, DIA is one of the more popular ones.
As we've always said, Lieber, the Procter & Gamble of Europe, bought Slim Fast and Ben & Jerry's on the same day.
Not related to exchange traded funds, but always a clever.
A clever comeback. Yeah.
So where do we go from here? What should investors be looking at? First of all, it's a great time to reconsider where you're at. If you were looking at making a major purchase, it's a great time to say, hey, things don't always go up. This quarter, we might continue to go down. I mean, think about how we only just cleared out January in terms of prices. Like, it was only 2 months ago that we were this high.
To be down for the year is not a major deal.
On average,
we're down 1.68%.
The average year has a 14% decline built into it.
Yeah.
We haven't seen that in 6 years. And right now they're saying, hey, we haven't had 3 days, this many days off in 4 years. And blah.
Yeah.
These are not scales that you can measure the stock market on. You can only measure, when you look at averages, you can only look at them at decades.
Yeah, they have a 200-day moving average.
Bigger periods of time, exactly.
Yeah, we look at larger periods of time.
Now, that's not to say it's not super scary and things are bad and people are losing real money that's important to them.
Sure, yeah.
But, what's interesting, too, is that, okay, we've got really low mortgage rates. We've got really a lot of fear out there. What does this do to real estate? People are going to be less confident making a big real estate purchase, but it's going to be extremely affordable for them to make it. That might continue to go up. And then we might have
it off to see what interest rates are going to do and things like that. You were talking about, even though we got rates low right now, is there speculation maybe that the Fed might reduce rates to
of
bring
course,
things back up? Where they said they probably wouldn't do it before.
Well, they don't want to, but they kind of have to, because the yield curve is going to go inverted again if they don't.
That's what I'm saying. Yeah, the yield curve, for the benefit of our audience, is
jargon.
10-year and 5-year.
I'm talking jargon.
Yeah.
So what it is that money should be more expensive the longer it's loaned out.
Right. Yeah. You should
because
get
there's more
for a
risk.
longer loan,
There's more uncertainty. You don't know what tomorrow's going to bring. So if you short-term loan. You're loaning money short-term to your buddy. There's probably no interest on there. You might, get to give them a hard time. If they want to borrow money for 20 years, they better pay you for it.
Yeah.
And so an inverted yield curve happens because the federal funds rate sets the short-term. They just say
like
what it is.
5 or 10 year
right.
or whatever.
I've got a client where we're rolling some treasuries because we're not sure what we want to do with the cash that this client has. And 90-day treasuries are still trading above 1%. In some cases, you're like, wow, so that's tied to what the federal government is telling people they have to do. But quickly you go into the auction world. When you go out further, the rates of long-term are decided in an auction. I'll slow down a little bit. I know we got a commercial break on. And an auction is what the whole stock market is based upon. It's the price that somebody's willing to sell, the price that somebody's willing to buy, and then you have activity. Well, longer-term rates are decided about, I want to get a rate of this, and you're offering a rate of this. You either choose to buy or you don't. The resulting trading rate that happens is based upon supply and demand. And right now, with all the fear out there, and as Shane always points out, with other countries under the thumb of the U.S., really, we've got extremely low long-term rates, and it creates a big problem when it's cheaper to borrow money long than it is to borrow money short. That's a disincentivization for economic activity, if you will.
All right. We've got to take a short break here. I need to tell you, though, about the Club Tavern and Grill, because they're voted Bozeman's best happy hour. The Club Tavern and Grill offers happy hour specials every day of the week. As one of Bozeman's most popular happy hour spots and sports bars, you'll be sure to find something you'll love from their extensive drink and food menu. They also serve breakfast, lunch, and dinner, and they've got a kid-friendly menu available. So to place an order for pickup or make a reservation for parties of 6 or more, go online to theclubtavernandgrill.com, theclubtavernandgrill.com, and check them out. They're in the Best Western Grand Tree on North 7th, across from Walmart. It's where the locals go. Tell them Tom and Mike and Shane and everybody else here at KMMS. Well, there's nobody else here at KMMS, I guess. Tell them we sent you in. All right. We'll be back with more with Mike McCormick, Shane, and myself right after this. Stay tuned. 21 minutes after the hour, Mike McCormick in the house. Shane Matobin, half man, half amazing, on the line. And he has a point of order. The chair recognizes the Honorable Shane Matobin from British Columbia.
We probably should look at the New York Stock Exchange composite. There are over 1,900 stocks listed on the New York Stock Exchange, and 1,500 of them are U.S. companies. The rest are, other public companies from around the world that are interlisted there. So, to give you, in the exchange in January of 2018 was at about 15,000, and it reached about 19,000 in January of this last year, the end of December 19th, January. So it's off to 13,000. So I mean, it's it has dropped substantial, and that's the reason I think that people that don't look at a bigger picture of the market we should talk about it, Mike. I'm sure you agree, because it's an overall look because of what's happening with this issue with China and trading issues and the logistics of being able to maintain your company with parts you need from China.
We've got a situation for sure, and how long it lasts. So when this began, I said, hey, this is like a natural disaster. There's a portion of the world that's stalled out and needs to rebuild, but what we typically see is that we see a pretty quick snapback to activity. This has gone beyond that to where we're having longer-term supply disruptions and also potentially more dislocations in the global trade economy as a result of it, and how that manifests. My brother, the liberal engineer in the Bay Area, and I were visiting, and he used to work for a company that made games, toys, digital games. Leapfrog actually was the name of the company. And they made toys for kids that were manufactured in China. And he said, one of the good things about the timing of this is that right now Chinese factories, at least in that industry, I know there's other industries, but at least in that industry, are effectively running on 50% right now. This is the time of year where the business cycle involves trying prototypes, trying new things, not mass production. This is gearing up for the mass production. So he
getting
said
ready to present stuff in
right.
April or May.
So a lot of people here understand the outdoors industry and the textiles where they got to place their orders ahead of time. So, there may be some silver linings in terms of when this is happening. But everybody's just trying to guess what the impact of this is really going to be. It's going to be a question of how globalization is globalization right now, too. And really, as always, I'd want to turn this back to the individual investor. I got my newsletter coming out. People are going to be seeing it here in the next couple of days. And, of course, it said, hey, I think you should get more aggressive. Of course it said that. I specifically said, I think in your retirement portfolios is a great place to take more risk. And you need to balance that risk with cash and paying off debt and owning non-correlated things in your taxable portfolio. But I do think that this is actually a good time for that to come out because people can choose, if you're 20 years from retirement, if you're 30 years from passing, meaning dying, these are the time frames that you need to still grow your money, and you do have an opportunity to take advantage of what is not a symptom of economic malaise. This is not a symptom of a problem in the economy other than a challenge for us to get through right now that will mitigate. It will ameliorate. We will not be. I haven't heard anybody say that this is the disease that's going to take down civilization. This is a challenge that we're having right now, and I think there's actually a small silver lining in that. Okay, this is a dress rehearsal for when a bigger, badder disease comes around. How we're going to behave.
And I think that's true. I think all of these things keep us focused on that. One of these days, something, like the Shane talks about the Spanish flu that took out half of Europe. I think
sure
way back when. So.
And then the N1H1 in '94, we were talking about it yesterday. It infected 1.4 billion people around the world. That's a lot of people.
That is,
that's a lot of people. And SARS had a death rate that was much higher.
Yeah.
Yes.
Which actually helped limit its spreading, sadly, too. So this is the new world. And you know what? I like to see a little bit of the international cooperation that's happening, too, is that as a humanity is at risk with this.
Yeah.
And it does tear down walls.
Oh, yeah.
And we all join together.
Everybody's looking for the cure.
The people that I've talked to that know China and know the Hunan province, they mentioned that they are living in the medieval ages of hygiene.
Yeah.
And they take comfort in the idea that, okay, that's the part of the country where they don't know that washing your hands and not picking your nose is a good strategy for this time of year, So we'll see how this plays out. But there's a cartoon in the paper today where the guy was, honey, you're wearing your mask wrong.
Yeah.
Then he had his face SARS mask, we call them right now. I guess we call them Corona masks.
Yeah.
And he had it over his eyes.
Okay.
And on his laptop was his 401k portfolio. He said, "No, I'm not." And so I do
look at my 401.
Right. You don't look at your retirement portfolios right now. Yeah, you've given back gains, and if today's a bad day, we'll give up gains that'll bring us back to October last year. Heck, Halloween wasn't that long ago.
Yeah, that's true.
You know?
Yeah. Let's see from our text line here. I got a question for you, but I'll ask it before the break, and we can think about it over the time. Let's see. Mike McCormick is not a Trump cultist. Unlike our president, he knows what is causing the markets to crash. Scary that Trump supporters believe this. Idiot Trump knows anything about economy, bankrupt casino, yada, yada, yada. Mike's a realist, tells the truth. Yes, we can handle and deserve the truth. Well, good. Well, I'm glad you're here, Mike, because we need the truth, you know. So, anyway, the question for you, and we'll give you some time to digest it over the break. Do you think the days of the 60-40 portfolio are over?
Oh, good question.
Yeah, looking at the bond position portfolio or bond portion of a portfolio with current low interest rates, the increasingly volatile time commitments, and since stocks have over time historically outperformed bonds, isn't the 60-40 split antiquated, especially in light of the new exponentially increasing COL for retirees? Always COL, cost of living. Always love to hear your thoughtful views. God bless and thank you. That's from Steve-O, and we'll answer that when we come back.
Appreciate that. Yeah, 60-40 portfolio. It is the sort of meat and potatoes of the mutual fund sales world. We'll see what we can accomplish after the break.
All right. Shane, we got a caller waiting. If you want to chat with them, we'll be right back with Mike and Shane and myself right after this. Welcome back. It is 24 minutes before the top of the hour, Thursday, February 27th, 25 degrees outside. We'll get to the caller in just a second, but we had a question for Mike before the break. Do you believe the days of the 60-40 portfolio are over with the stocks and bonds situation? So what do you think?
I think that the answer is no. I think that anybody that sits in one of these seats on especially a time like this and tells you that this is different and you need to come up with a different strategy and we've got the right solution for you is selling you something. That said, the concern about bonds is still there. They've gone up so much over this past decade, and at some point, without rates going negative, they're not going to be able to go up anymore. I think we're probably getting there. I think there's probably ways that people, you can get a dividend stock, a blue chip dividend stock portfolio that'll pay you more in dividends than owning bonds right now.
That's right.
So I think that prudent, active investors might want to look at that idea. People that are nearing retirement that have been comfortable in the 60-40 probably shouldn't change too much.
Yeah. Shane?
I just want to report that Moderna on Monday sent their first batch of their vaccine for the coronavirus, which is ready for government to start testing on humans. Interestingly enough, the therapeutics and vaccine company shipped their antiviral, it's called mRNA-1273, to the National Institute of Allergy and Infectious Diseases. I'm telling you this because of what I'm about to say. They expect to begin clinical trials with 20 to 25 healthy human beings by the end of April to evaluate the vaccine's safety and efficiency. And it would mark a 3-month period between the vaccine design and human testing. What's amazing about this is that this is normally anywhere from a 2 to 20-year process. And Dr. Anthony Fauci, the director of the National Institute of Allergy and Infectious Diseases, he said, this is a remarkable record for science to develop something this quickly. So I'm just letting people know that this sort of thing the people are moving on it quickly. And I'm not saying anything other than to make people aware of this. Moderna is a publicly traded company on the NASDAQ, and mRNA is $29.16 a share. So go read about it, check it up, and learn what the solution may be.
Okay. Let's take a phone call, 522-TALK. Caller, you are on the air with Mike McCormick, Tom, and Shane. What's up?
The only way you can develop a vaccine in a short period of time is by bypassing all required human testing. I mean, it takes over a year, minimum. Minimum.
Yeah, it takes a long time for the FDA to get their act together, that's for sure.
In a crisis situation, they can bypass
Oh, they can,
all
sure. Yeah.
requirements.
Yeah. Nope. You're absolutely right.
And that's what they'll do.
I'm sure they will. They
The
pretty well
same
have
people, the same people that created this virus are the people developing the vaccine.
Yeah.
What a concept.
Yeah. Well,
I mean,
if you know the cause, it's easy to find the cure.
It would be a shame. I'm selling protection. It'd be a shame if the store burned down.
Yeah.
Would you like to buy some fire protection?
All right, man. Hey, thanks. All right. Well, I don't know. We don't want to turn Mike's time into the coronavirus, but
you can't ignore this. You can't ignore that. This is real life right now.
Yeah, obviously it has an effect, and
we've been watching. We've been our emotions have been manipulated by these fears forever. I was thinking about the old Batman series. I'm sure that the old Batman was slipped to poison. And then here's the cure. You have to get it, and then they tie him up and put the cure over here, and the clock goes, and the villain leaves, and he has to undo it all. Yeah. And so these fears this is life,
Sure.
This is where we are. And especially there's something unique to a virus that really strikes a chord for us. We can't see it. I keep, thinking about World War Z with Brad Pitt, which is really a pretty awful movie. I mean, awful meaning like it impacted me. I'm like, oh my gosh, they sort of made this realistic. This is a terror. Who thinks about these things?
Isn't that true?
So fear is an emotion, and fear drives behavior. And take your hands off the keyboard when you're doing that with money.
All right. Let's take another call. Caller, you're on the air with Mike McCormick, Tom, and Shane. What's up?
Yeah, I just saw a political ad with Bloomberg, the way they're politicizing this virus situation, not to make light of it, but another thing they could possibly do is get Michelle Obama to hashtag the deal, like she said, bring those girls home that got abducted over there in Africa or whatever, and she could just say, get rid of the virus, and we could all hashtag that. So that's just an idea.
Yeah, no, I saw the Bloomberg ad this morning, and I know what you mean. Yeah, he's on top of it. So thank God we've got Mike.
Well, the thing about this,
Mike will do it.
The thing about this, it's a bad deal, naturally, and the hygiene requirements and stuff are always good for anybody. But instead of coming together, you got Chuck Schumer and them guys running around there saying it's Trump's fault now because he wasn't prepared. Well, who would have been prepared for this?
Yeah. Yeah, we weren't prepared for 9/11 either. So
and the other thing kind of raised my hackles. You got that message from that guy, whoever it was, about the cult following of Trump. I'm a follower of Trump, and I ain't no cult. So there you go, Buster.
All right, man.
All right,
thanks
bye.
for the call. All right, that's right. All right.
It is going to be interesting how. I'm just looking in terms of numbers. I bet that it's not until after the election that we come back to these recent highs in the stock market. I think we're going to have a good rebound on it, but I think that the pullback that we're putting in now, bringing valuations back to a bit more reality. And like I said, come April, once this thing dies down, knock on wood, obviously I don't know what's going to happen, but I think that just like any flu cycle, and by the way, I think I read 100,000 people have died of the normal flu this year.
Yeah.
It's going to clear up at some point. And then like I said, we'll have pent-up activity, pent-up demand. Maybe we'll have some better strategies on how to deal with this next time, making us bigger, healthier, happier.
All right, we got a caller waiting on the line, Shane. I got to take a quick break. If you could chat with them for just a moment, we'll be right back with Mike McCormick right after this. 14 minutes before the top of the hour. Mike McCormick in the house. Tom Eaglehoff, your morning mayor. Shane Tobin on the line in Vancouver, British Columbia. And, we're talking about this coronavirus and the markets. And
markets sell-off. Yeah. It's a bloody day today. Just another bloody Thursday.
Yeah.
The good news about Thursday is it's almost Friday. It will, like I said, take the weekend for us to cool down and reevaluate.
Cool the jets, so to speak.
Don't change lanes on icy roads.
Mm-hmm.
I got to tell you this because I just got a call from one of our great callers, and he asked me to check to see if the coronavirus had a patent. So I went to the patent office, and yes, it does. It was patented as a vaccine in 2015, and the coronavirus was apparently invented by Burke Institute on July 23rd, 2015. And according to the patent office, the largest shareholders of Burbright Institute are Bill and Melinda Gates Foundation. Now, I'll do this is a cursory review of the patent office. I'll go and find out more about this as I read through what I'm seeing now. But interesting aspect. I want to make sure that this is the specific coronavirus we're dealing with, of course. But that's basically what the patent office of the U.S. is saying about it, whether or not it's the same virus.
We don't seem to know where the name came from. You'd think if it started in China, it would be some kind of Wang Fu virus or something, but
But that is interesting. It's interesting to get that information from your government.
Yeah.
I wanted to comment from Mike. Did you watch the president's news conference yesterday?
No, I did not.
Oh, well, I was really. They started asking about the market, and I was very impressed by his comments about the effect that Boeing had on the economy, and he actually, like off the top of his head, had the numbers that he thought how it would affect GDP and the concern he had as an example of the economy. Of course, he went on to talk about how strong the economy is and how supportive people are, and people are still consuming and so forth. But it was interesting when they did ask him questions about the market. His knowledge of the market in reference to the specific questions was like right on hand.
Good.
Very impressive. It was impressive.
Mm-hmm.
Good.
Yeah.
And don't get me wrong, I don't watch any political stuff.
Yeah.
It makes my life happier.
So the Dow is down now 649 points.
Yeah, we're really picking up some steam today. I think that there might be some opportunities to pick up some things. Oil and gas is absolutely decimated.
Aren't they?
Absolutely in shambles. So if you've got faith in petroleum and you've got opportunistic money, you might be able to make some money.
Yeah, oil at 48 right now. So or yesterday anyway.
Yeah.
It's lower than that probably.
Yeah, 46. Yeah. It's down 255. Brent in Europe is 51.21. Natural gas still holding in at 186. Yeah. Gold jumped $17.50 to 16.54. Silver is over 18.
Yeah,
7 cents. So,
but it's interesting that the safe haven, so gold, for example, the gains that have been made by any safe haven have not been anywhere near what the losses are on the broad market. Mm-hmm. It's not commensurate. We're not able to track money. Money's going into people's pockets, cash.
Yeah, that's where I think they're going to cash. I agree with you, Mike. They're going to cash.
All right. Let's take a phone call. 522-TALK is the number. Caller, thanks for waiting. You're on the air with Mike McCormick and Shane and Tom. What's up?
That's Colonel Clink.
What's up?
Well, I just asked Shane to ask that question a while ago. Mm-hmm. I want to ask everybody this. Why would one of the richest men in the world, him and his wife, want to patent the coronavirus is beyond me. He is in the computer business. Why? And maybe, did they weaponize it? Has it been weaponized? Is that why it's patented?
Well,
there's a lot of damn questions here, Tom, that don't add up.
One reason you would patent something is to protect it from anyone else getting their hands on it.
I understand all about patents. Yeah. I understand that.
Well, listeners may not. I'm just...
Yeah, well,
just
why?
Including everybody.
Yeah, why would a patent say it's in the Constitution, it's protected?
Yeah.
But anyway, why would anybody, like Bill and Melinda Gates or anybody, want a patent other than maybe the federal government, and maybe through a disguise with Gates, want to patent or weaponize?
Well, they've spent a lot of time in Africa, and this may not be the only thing that they have patented just because they want to keep it under wraps where it won't get out into You know,
Why? Why though, Tom? Why would they want to?
To protect it. To protect it. To protect it.
To protect? Did they invent the coronavirus? And
I don't know if they did or not, but they certainly have. They have wrapped it up so that it isn't available except through them.
Well, maybe.
Well, if it's patented, then there's recourse. You know.
Yeah, the hell of a recourse.
And they got the money to recourse it.
Yeah, well, to weaponize it. You know, the American people get screwed all the time. We get it all the time. You know, and I'm damn sick of it. And I asked Shane to do this.
Yeah.
And I thought to myself, was this weaponized? Okay. They've tried for years and years to create a virus that would kill everybody, except them that had an antidote for it. Now, that sounds like a conspiracy theory, but it isn't a conspiracy theory now when it's been patented by Bill and Melinda Gates. And that's all I got to say. There's something darn screwy here.
All right. Thanks. Thanks for the call. All right. Well, I'd be a little more concerned if Alibaba patented it, but
That's right.
no. Well, caller, we got a call waiting. Shane, if you could chat with them, we've got to take a quick break here. Mike McCormick in the house. We'll be right back. 6 minutes before the top of the hour, we've got a caller patiently waiting on the line. Caller, you are on with Mike McCormick. What's going on?
Hey, I was just wondering if there isn't a little Sanders flu in the markets as well. You know, I understand the coronavirus is I think it's largely a media panic that's been created. I'm with the president. I don't think it's going to be as bad as people want us to believe, but we love hysteria in the media here. But markets have also been watching the Democrat race, and with Sanders looking like he might get the nomination, I bet you there's some of that going into the market latest shakiness.
Well, there's probably some truth in that. You know, the unknown we're more fearful of the unknown than we are.
Yeah, I mean, this strikes great nerves. I mean, I was just thinking of all the movies that have been done with this concern, especially we're tying in the conspiracy theory of Bill Gates, you know, trying to kill humanity. The Kingsman recent movie went through this. I already mentioned World War Z. You could go back, and I was thinking Moonraker with Roger Moore.
Yeah.
Wasn't that?
Yeah, that was good. Yeah.
Yeah. So, so it's a pretty good playbook out there. I don't know. You know, politically, this is a really good one for Democrats to try and, you know, I don't know what. Yes, I think we're all in somewhat agreement that it's a good time to remain calm, wash your hands, don't pick your nose, and don't change your portfolio too much.
Yeah. There you go. Hey, thanks for the call. Yeah, thanks for listening. All right, let's take another call. 522-TALK is the number. Caller, you on the air. What's going on?
Hey, Tom, it's Mike.
Hi, Mike.
So, the patent for the coronavirus is not the one they're talking about now. It was a patent that was applied for a weakened version of the virus in the same family as the Wuhan virus. So the common cold is also a coronavirus, and so is SARS.
Okay.
Yes, that's
Hello?
Right.
Yeah, no, we're here. Yeah, we're here. Sorry.
So Bill Gates does not have a patent on this virus.
Okay.
Can you answer why people do want to patent these viruses? I imagine it's for research
I haven't
purposes.
got that far yet.
Okay. I mean, I'm optimistic that this is based upon people saying, "Hey, we can create a low dosage version of this to play with it and try and figure out how to cure it so that we can have a cure."
Well, I think Shane alluded to the company that patented it is part of the Gates funding family, whatever. I don't think
right. They're getting research
I don't
dollars
believe,
from a variety of donors, including the Bill and Melinda Gates.
It's patented by the Pirbright Institute.
Mm-hmm.
Yeah, that's what I said.
Yeah.
Mm-hmm.
Yep. Who gets some funding from Bill Gates.
Yeah.
That's correct. Yeah.
So, all right.
So,
hey, thanks, Mike.
thank you.
All right. Thanks for the call. All right. Well, Mike, we're getting down to the wire here.
We
Got
are,
about a minute left.
and I think that I should go and point out that there's a few few deals out there that I think are worth looking into. Now, listen to my disclaimer. You know, I'm not responsible for anything you do based upon listening to me. It's a nice place to be. But Verizon is a company that I pay monthly come hell or high water, especially on times of concern. You call people you love. You use the services. Its price to earnings ratio is below 13, 12.28. That's almost getting to be an average long-term fair value.
15 is iffy.
15's good, but that's more of you're blending in growth companies. So this is more of a value. So I'm going to call this somewhere near fair value for a long-term look. It pays a 4.3% dividend,
which is pretty good.
Bingo.
Yeah,
and dividends, you get taxed less than other money.
15%. Yeah.
Verizon's probably pretty solid on covering that dividend. Come a lot of different shocks. They've got their hands in 5G. Diversify out. You can buy the whole communication services index. You dilute your dividend, but there's things that you can do in times like this that will make you feel good that you did something. Going to cash is will make you feel good, but you got to make sure you get back in again pretty quick.
Yeah. Well, the other thing to think about, too, as we finish up, Mike, you got till April 15th to contribute to an IRA if you don't have a thing at work.
Tax, right.
Yeah.
And so, if you don't have a thing at work.
$6,000 to $7,000, depending on your age.
If you're a business owner, you still have the opportunity to open up a SEP. You can put 25% of your paycheck into a retirement account just for yourself. You get to manage it. You might be able to buy some of these things on sale. Contact your tax advisor first.
Yeah, absolutely.
And they're the doctors on this and doing hard work for you.
And also childcare. Childcare, you get a credit for that up to I think
you can't afford not to make babies.
Yeah, 20 to 35%. I think. It's what is it, $3,000 for one kid and $6,000
health
for
savings
two or more.
account, HSA account. If you have a high deductible health plan, that is the most powerful economic tool we have out there. Triple tax benefits. We'll talk about that next week, maybe. Thanks for tuning in. Thanks for the questions, everybody. Stay healthy.
All right. All right. Thanks, Mike.